So if you've been kind of casually scrolling through business news lately, the whole story around the toy industry has been, well, pretty bleak.
Yeah, that's putting it
You
mildly.
hear about birth rates dropping, you see kids just glued to screens instead of, action figures. The whole vibe has been that the golden era of toys is basically over. And then Hasbro drops their Q4 2025 earnings report.
And just completely flips the table on that whole narrative.
It really, really does. I was looking at the numbers this morning. Q4 revenue is up 31%. Adjusted operating profit up nearly 180%.
Wow.
For a company that supposedly just sells plastic in boxes, those are like tech startup numbers. It just doesn't add up.
Well, it doesn't add up if you're still thinking of them as just a toy company. But if you actually dig into this report, and we're looking at the one from February 10th, Hasbro isn't really acting like a toy manufacturer anymore.
Right.
They've sort of morphed into something else entirely.
And that's really our mission for today. We're not just looking at a stock ticker. We're going to try and figure out how the company that gave us Mr. Potato Head turned itself into this digital-first juggernaut that's reaching 1 billion fans a year because they have the strategy they keep mentioning, playing to win. And, I mean, looking at these numbers, it looks like they're actually winning.
They are. But, we have to be careful with those headline percentages. If you just say Hasbro is up, you're missing the real story.
Okay.
The real story is that the old Hasbro, the one you remember from being a kid, it's actually still struggling. All that growth is coming from a new Hasbro that's basically funding the transformation of the entire business.
Okay, so let's get right to that new Hasbro because the numbers are, they're stark. It's Wizards of the Coast.
Without a doubt, it is the engine.
The stats here are, honestly, they're kind of shocking. The Wizards segment, that's magic.
Yeah.
The Gathering and D&D saw its revenue jump 86% in the fourth quarter.
86%.
That feels like a typo.
It does, but it's not. It is, however, a very specific alignment of stars. You have to understand why it jumped that much. It's not like people just suddenly bought more cards for no reason.
Right.
It's a fundamental change in how they design and sell the game. They've really leaned into this model of tentpole releases mixed with their Universes Beyond strategy.
Universes Beyond, that's the thing where they bring in outside IP into the Magic system, right? Like putting, I don't know, Frodo Baggins on a Magic card.
Exactly. And we should probably pause on that for a second because historically, there was a huge amount of skepticism about this from the community.
Oh, yeah, the hardcore fans.
The hardcore fans were worried that bringing in, The Walking Dead or Doctor Who would dilute the brand, ruin the whole fantasy feel of it. But, looking at Q4, the skepticism lost. The data won.
All because of the sales figures.
Because of the sheer scale of the engagement. They revealed that the Avatar, the Last Airbender set, it's now the third highest selling set in the entire 30-plus year history of the game.
Third all-time. Wait, what are the top two?
Lord of the Rings and Final Fantasy.
And you notice the pattern there.
Yeah, I do. None of them are original Magic lore. They're all from outside.
Precisely. Magic has evolved. It's not just a fantasy card game anymore. It's become, you could say, an operating system for fandom. An operating system for fandom. I like that.
You bring your favorite thing, Marvel, Star Trek, whatever, and you run it on their software, which is the game mechanics.
So it's basically the Fortnite of tabletop gaming.
That is the perfect analogy.
Wow.
And just like Fortnite, it creates this massive funnel for new players.
Yeah.
If you love Marvel but you've never played Magic, you might buy a deck just because it has Iron Man on it, and boom, you're in the ecosystem.
But, okay, here's my question about that. Is that ecosystem actually healthy? Because I see a lot of people buying these, expensive boxes just to put them on a shelf and hope they go up in value. If it's just a speculator bubble, that 86% growth could just, poof.
That's the big risk, right? The Beanie Baby effect.
Yeah.
But CEO Chris Cox was really specific about this on the call. He knows Wall Street is worried about that. So he dropped a very specific number. Over 1 million unique players in organized play. That number is up 22%.
And why is that specific number so important?
Because speculators don't play in tournaments.
Right.
Speculators don't go to Friday Night Magic at their local store.
Right.
If you've got 1 million people physically playing in the game, that means 80 to 90% of your customers are actually opening the packs. They're using the product, not just hoarding it. That's sustainable.
It also creates a kind of social lock-in. You play because your friends play.
Exactly. And that physical footprint is their moat. The Wizards Play Network, the local game stores, is up 20% to over 10,000 locations.
Wow.
In a world where physical retail is dying, the local game store is actually expanding. That is the infrastructure that keeps this whole engine running.
So Wizards is the cash cow, but Hasbro is still this massive company. That can't just be a card company. And the CEO kept using this acronym to describe the broader strategy, GEM2.
Sounds like a droid from Star Wars.
It totally does, GEM2. But let's unpack it, because this really seems to be the filter they're using to decide what lives and what dies. It's gamified, entertainment-driven, multi-purchase, and multi-generational.
It's a bit of corporate speak, sure,
Yeah.
but the business logic behind it is actually pretty ruthless.
Let's break down that multi-purchase part. That feels like the key difference from the toys of the past.
Think about the old toy model. You buy a kid a fire truck. They play with it for a few months, it breaks, they get bored, whatever. You don't need to buy another part for that fire truck. It's a one-and-done sale.
And Hasbro saying no more.
Hasbro saying they don't want that business anymore. They want the magic model applied to everything. Look at Beyblade. You buy the top, but then you need the launcher. Then the arena. Then you need the upgrade parts. It's an ecosystem.
Or multi-generational. They're not just selling to 7-year-olds. They're selling to the adult market, the
Yeah.
35-year-old with disposable income.
Which explains why this whole GEM2 category now makes up something like 70 to 80% of their sales.
And 95% of their future investment.
That's the pivot. They're explicitly comparing themselves to companies like Lego or Bandai Namco companies that build these systems, not traditional toy makers.
But of course, a pivot like that leaves casualties. The report was pretty blunt about the traditional toys.
It was brutal. Brands like Furby, Nerf, Play-Doh, I mean, these are household names, all saw declines at point of sale.
Is that just a bad quarter? Or is Nerf actually dying?
The CEO framed it as structural, which is CEO speak for this isn't coming back.
Ooh.
He talked about global birth rates being down. He talked about digital substitution, which is just a fancy way of saying a kid would rather play Roblox than run around with a foam dart gun.
So the days of the hot holiday toy frenzy, the Tickle Me Elmo riots, those are over.
For that kind of toy, largely, yes. If a toy doesn't have a digital part, a collector part, or a huge movie tie-in, Hasbro isn't really interested. They're just clearing out that inventory.
And yet,
Yeah.
I did notice the consumer products segment, which is where the toys live, it actually grew 7% in Q4. So somebody is buying toys.
Yes, but look at which toys. It was Peppa Pig, Marvel, Beyblade, Hasbro Gaming. It was all the IP-driven stuff. And just as important, they fixed their inventory problems, which helps the profit margin a ton.
This reliance on IP brings us to what the CEO called their superpower, or I guess their hedgehog concept.
Right, the hedgehog concept. What's the one thing you can be the best in the world at?
Yeah.
And for Hasbro, they're claiming it's inspiring a lifetime of play.
And you can see the proof in how many partners are signing up with them. It feels like every big studio has just decided Hasbro is their official toy department.
It makes sense for the studios.
Yeah.
Why build your own global distribution when Hasbro already has it?
Well, the list just for this quarter was huge. You had the new Harry Potter deal with Warner Bros. Discovery.
Which is massive. I mean, with the HBO series on the way, that reboots the whole merchandise cycle for a new generation. It's
Yeah.
perfectly multi-generational.
Then you've got Netflix. They're partnering on K-pop. Demon Hunters, which is apparently Netflix's biggest animated film ever.
Right, going for that tough tween and teen demographic.
And for the older crowd, there was Voltron with Amazon and Street Fighter with Legendary.
But the real anchor is still Disney. They made a point of saying 2026 will be their largest year ever with Disney.
I mean, the slate is stacked. Toy Story 5, The Mandalorian and Grogu, Avengers,
Yeah.
Doomsday. These are more than movies. They're cultural events.
But here's the tension in that strategy, and it's important for the bottom line. It's expensive. When Hasbro sells a Transformers toy, they keep all the money.
Because they own it.
Right. When they sell a Baby Yoda toy, they have to pay Disney a royalty. And royalties were up in the report.
Significantly.
Significantly. It squeezes the margins. So they're betting that the sheer volume these huge brands bring is worth that lower margin on each item. They're trading margin for certainty.
Speaking of trading margin, we have to talk about the huge gamble they're making on video games. They're not just licensing anymore. They're building AAA games themselves.
This is, I think, the highest risk part of the entire strategy. They're spending millions right now developing games like Exodus, which is a big sci-fi RPG, and Warlock, a D&D action game.
And we won't even see those until 2027.
Exactly. So right now, financially, it's a headwind. It's just a cash drain. They're paying all these developers and seeing zero revenue.
But the trailers have what, 100 million views? The interest is definitely there.
The interest is there, but game development is just notoriously hard. Flops happen. If Exodus comes out and gets a 60 on Metacritic, that's hundreds of millions of dollars just gone.
But if it hits,
If it's the next Baldur's Gate 3, it changes the whole company's valuation overnight. It's basically a venture capital bet sitting inside a public company
funded by Magic Cards.
funded by Magic Cards.
Now, there was one other tech thing mentioned that feels more immediate, AI. And, every CEO talks about AI. Usually it's just buzzwords, but the specifics here felt real.
Yeah, Chris Cox didn't just wave his hands around. He gave numbers. He said they're using Google Gemini, OpenAI, 11 Labs, right across the business.
The efficiency stat was the one that got me. They expect to free up 1 million hours of lower value work in 2026.
Million hours. That's just immense.
What does that actually look like? Are we talking about like writing emails?
It's some of that, but the creative part is where it gets wild. They mentioned using AI with 3D printing to cut toy prototyping time by 80%.
80%. That seems impossibly high.
Well, think about the old way. A designer sketches a toy. A sculptor makes a wax model. They ship it to a factory. 2 weeks later, a sample comes back. It's wrong. You start over.
That loop takes forever. And now?
Now, AI helps generate the 3D model. The printer spits it out in their office that afternoon. They can do 10 versions in the time it used to take to do one. They can fail faster.
So it's not replacing the designer, it's just removing the friction of physics and shipping.
That's the argument, yeah. They can reinvest those saved hours into more innovation.
It definitely sounds good. And from a shareholder view, it just screams higher margins, which I guess brings us to the outlook for 2026.
Right. What are they actually promising?
They seem to be playing it pretty cool. Revenue growth of just 3 to 5%. Operating margins holding steady. It's solid, but it's not that 86% growth we saw from Wizards.
Well, it's prudent because they have real headwinds. We mentioned royalties. Tariffs are another huge one they can't control.
Right. They projected tariffs would cost them $60 million in 2026. That's up from $40 million.
And that's a direct hit to the bottom line. You can't really innovate your way out of a tariff.
And raising prices is tricky because of the consumer. The tale of two cities. We keep hearing that phrase on earnings calls.
It really paints the picture of the economy right now. Chris Cox said the top 20% of households, the people buying the $300 collector boxes, they're fine. They're still spending.
But the lower income families
Are pinching pennies. They're pulling back. And that's a risk. If the economy really turns, that top 20% might pull back too.
So Hasbro is shifting its whole focus to the people who still have money. That's why we see all these premium sets and collector's editions.
Effectively, yes. That's what premium means. It means targeting the resilient consumer who sees this as a hobby or an investment, not just a disposable toy.
But despite all that, they are confident enough to give cash back to investors.
A $1 billion share repurchase program. That's a very strong signal. It says, we believe our stock is undervalued and we have enough cash to buy it back.
So if we just step back and look at the whole picture here, this isn't the Hasbro we all grew up with.
No, that toy company is basically gone. This is a digital-first play company. And magic. The Gathering is the sun that everything else orbits around.
Traditional toys are fading, replaced by these gamified, multi-generational brands that, require you to keep buying things.
And they're using the world's biggest IP, Disney, Marvel, Harry Potter, to keep the pipeline full while they quietly build their own video game future.
It's a fascinating pivot, but I want to end on this thought that came up right at the end of the call. We talked about AI saving time designing toys, but Chris Cox said AI will eventually open up all new categories of play that we can't even imagine.
Yeah, that's the part that really sticks with you. Right now, AI makes the current work faster. But what happens when the AI is the dungeon master?
Exactly. If the AI is generating the story in D&D in real time, and it's perfectly customized to you, or if it's balancing a card game to be mathematically optimized to keep you hooked.
Does that strip the soul out of it? Is the magic in the human imperfection? Or is it just a dopamine loop that an algorithm can perfect?
If the game is designed to be perfectly engaging by a machine, are we playing the game or is the game playing us?
That is the question. Hasbro, and really every player, is going to have to answer over the next few years.
On that slightly unnerving note, I think I'm going to go roll some physical dice. Thanks for taking the deep dive with us.
Always a pleasure.